Welcome to XM.com for today's market comment by Haralambos Pisuros. I'm Christina Marujos. The wounded dollar showed signs of stabilizing against most its major peers after the minutes from the latest FOMC decision suggested that policymakers were willing to maintain a restrictive policy for some time, but also that interest rates would only be raised if new data showed insufficient progress in reducing price pressures. The minutes kept the door open for another hike should inflation prove to be stickier than expected and confirmed the Fed's higher for longer mentality, which may have helped the dollar to pause its latest steep slide. It didn't, however, convince investors to lift their implied rate path, as perhaps the message was considered outdated. Traders' recent behavior suggests that they pay more attention to the data instead of Fed rhetoric. Therefore, for the dollar to stage a decent comeback, they may need to see numbers pointing to a resilient economy or stickier inflation. Even if rate hike bets do not resurface, they could scale back a decent amount of basis points worth of cuts for next year. The opposite may be true if U.S. economic releases continue to disappoint. The pound was among the currencies that continued to outperform the dollar yesterday, as at a hearing before the Treasury Select Committee, Bank of England Governor Bailey reiterated the view that they are not changing stance on interest rates and that it is far too early to be thinking about rate cuts. However, the market continued to anticipate no more hikes and around 65 basis points worth of rate reductions for 2024. Attention for pound traders now turns to the autumn budget statement, where Finance Minister Jeremy Hunt will present the government's fiscal agenda aimed at boosting a wounded economy. Although any bold announcements could be safe for next year's spring budget, closer to elections, any tax cut hints today may benefit the pound. Wall Street pulled back on Tuesday, with the Nasdaq losing the most. Following the latest very sharp rally in equities, a Fed minutes day may have been a good opportunity for some profit-taking. However, bearing in mind that investors remain convinced that the Fed will cut rates sharply next year, and that Treasury yields are still on a downward sloping path, another round of gains in stocks cannot be ruled out. The pause in the dollar slide and the pullback in stocks were unable to stop gold from extending its recovery and poking its nose above the round number of $2,000. It seems that the precious metal remains very attractive, despite the Middle East premium abating noticeably. Thank you for watching today's market comment here at XM.com.